The market takes a stroll down Shopify Lane while dangling the carrot in front of the bulls. This is Invest with Jacob. So everyone's on edge for the big Fed meeting today. Well, if you know me or you know anything about Elliott Wave, you know that I don't really believe news cycles move the market. I've talked about it before and I will again in just a minute. But first, if you're new here, welcome to the show, guys. My name is Jacob Gabbard and this is Invest with Jacob. And I highly encourage you to hit that subscribe button down below so that you can get our daily S&P updates, our trade setups, and our buy alerts. Okay, guys, so you know the way my boys have been playing hockey, I had to come out in full mascot mode today. 4 straight over the Avs in game 1 Monday. We're looking pretty good. Anyway, back to the market. So the Fed meeting today is going to be what the Fed meeting has been for the last 29,000 years of the Fed meeting. They're going to come out and they're going to say, we're going to keep buying bonds and we'll give ample time if we're going to stop doing that. That's what they're going to say because nothing's really changed since the last Fed meeting. But everybody's very nervous about it. And even if they do say something different, I don't think it'll make that much of a difference anyway. As I've talked about in the past, I don't believe in news cycles moving the market. Now, they can be catalysts, which is to say if the market was ready to make a move up or down and it gets some sort of event that kind of coincides with that, it can start that move, but that move was going to happen regardless. Think back to the COVID crash. The Fed intervened 3 times on the way down to the bottom. All 3 times the Fed failed to stop the fall. Suddenly at the bottom, the Fed intervened for a 4th time, and it hit the bottom target and reversed. Everybody said, oh, the Fed fixed it. Well, why didn't the Fed fix it the first 3 times? Because the Fed really doesn't do that. The Fed says what they're going to try to do to fix the market, but it doesn't really change it. It's just chatter, honestly. It's the same thing if you think about the COVID cycle. Everybody said, oh, COVID caused the crash. Well, if you know anything about Elliott Wave, you knew that crash was coming. You knew there was a potential for a 30% crash impending. Now, COVID was the catalyst, and I've talked about how news can be a catalyst. Where the market's moving up, you get some bad news, and there was an impending down move coming, and that launches it into its down mode. And then everybody congratulates themselves and says, yeah, that was COVID. Well, if it was COVID that caused the crash, then you're also going to have to tell me how it was COVID that fueled the largest one-year rally in history where we almost doubled the market during the highest unemployment in U.S. history, during a time when almost every state was completely shut down. Almost every business was completely shut down. Only essential workers were working. And the government was paying money out the butt to keep people afloat. Now, to get into what the market did, it did what it's done for the past, it seems like 20 weeks, where it starts out high or going for the high or gapped up and then craters down at the open, sideways, and then decides if it's going to try to go for a high at the close or just meander. And today it meandered. So not a whole lot happened, so we decided to stay in the trade because the structure predicts we'll get one more high, and I was fairly confident that they wouldn't do anything crazy before the Fed meeting, and the Fed can act as a catalyst to move the market up for us. I'm pretty confident the Fed's going to say what it said for the last 25 Fed meetings, where they're going to provide unlimited QE and give us ample time when they're going to stop giving us QE. Now the bigger story is this market needs an adjustment, or a correction, or a pullback, or an eraser, or whatever you want to call it. Because it's so top heavy right now, the investor sentiment is top heavy. They feel like it's a top. They don't want to get their money in right now. It's a bad place to push. And so what's happening is you're getting tons of chop and whipsaw. And the only thing that's going to stop that is a strong correction. I suspect once we hit this new high, if we haven't hit the last high already, we are going to get a strong 200 to 300 point correction that is going to reset the market and is going to have a whole bunch of investors on the sideline say, finally, a buying opportunity. And they're going to jump in, and that's when we're going to start to see clean structures and better waves and better movements through the stock market where you get gap and go structures, where you get structures that add up, where you get clean waves, and market sentiment and price are driving the market instead of top-heavy fear. So that's where we're at right now. We're looking for one more high, and if we get that high, we're expecting that pretty decent pullback. Guys, if you want to get my real-time market updates where you get to hear what I think the market is going to do in real time during trading hours, you need to get in my Facebook group. There's a link down in the description. All you got to do is jump in there. The only requirement, the only thing you got to do, hit subscribe down below and subscribe to this channel. You're going to love it. It's a great bunch of people. We're all traders together. I kind of lead a group of people who are learning to trade and want to trade, and some of them are good traders already. And we make money. We have successful trades, and it's all over in my Facebook group. In there, you'll find a link to my Slack channel, and on there, it's real-time chat. It's all free. All you got to do is hit subscribe. So get in that Facebook group down below. I'd love to see you over there. I'd love to talk to you and give you my thoughts on the market and hear your thoughts on the market. Okay, guys, so key takeaways for today, very simple. We're looking for one more high. I'm pretty sure the Fed is going to be the catalyst that drives us up to that one more high that I'm looking for, or I guess could be the catalyst that gives us an early 200 to 300 point correction that I'm also looking for, but I think it's going to come after the one more high. Otherwise, if after the Fed meeting they decide to drop it, we're going to bail at break even and wait till the bottom of that drop and get an excellent buying opportunity. All right, guys, that is the market update for today. I will talk to you tomorrow.